Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I was ripping through the comment section, and you guys are leaving really good comments. Thank you for the comments. And I wanted to touch base on one of these because it is a topic that a lot of people on YouTube are covering right now. And I'm going to give you my opinion on it, and you're asking for my opinion. And here's the questions. There's actually 4 questions in this. Andy, can you comment on why lumber has crashed by 63% in the near term? Does this play against your commodity theme? YouTubers are saying it's a bad time to buy real estate, and the price of lumber spooked people into buying at an inopportune time. Also, some say we are going into disinflation, then deflation, then to inflation. So you've got 4 questions there. The first one is, why did lumber crash? The second is, does it affect the commodity theme? Third is the opinion of YouTubers saying it's a bad time to buy real estate. And fourth is the inflation, disinflation, deflation debate. Those are 4 big questions. So I'll try to tackle them one at a time. So before I answer the lumber question, I'm going to give you a little bit of background here. The lumber to gold ratio is a leading indicator for a commodity boom. And I said lumber to gold, not just lumber price, but lumber to gold ratio. And what that is it's basically saying that new home builds are increasing the demand for lumber. And what happens is lumber is going to outperform gold. So you're going to see that ratio go in favor of lumber outperforming gold. It's the same thing as the copper to gold ratio and platinum to gold ratio. They're all very closely linked together, and they paint a picture for a commodity boom. Now, we had lumber spike up, and then we had lumber crash. It was a massive move. And when the economy remains open, I'm going to first go back on how this ratio works. When the economy is open and you have basically a steady supply, what happens is the demand for lumber goes up, and it will slowly go up and up and up and exceed the supply of, we'll call it the average lumber supply. When that exceeds it, the demand, prices start to go up, and it's going to incentivize those who make lumber or harvest lumber. It'll incentivize them to create more demand. So you're going to see a price increase at a faster rate than the rate of gold, and it'll be a favorable ratio. And it's basically saying that we're kicking off a housing boom. And a housing boom basically kicks off the commodity boom. So that's our indicator. The problem with this time around is the government shut down the economy. They shut it down. So it created these supply problems. It screwed up the whole supply chain going back. So we saw this massive run up in lumber because we have massive demand. Demand is still increasing for lumber. We are still trying to build more new homes above the average, and it's increasing. So we're in a real estate boom. The lumber supply got all messed up, and that's what you're seeing. You're seeing this gigantic move higher, and then the supply coming back online and bringing it back down. So what it's doing is it's going between the supply-demand. So the demand was high, supply got cut off, it shot higher. Supply came back online because people were less willing to buy lumber at the prices that they were at that very expensive price. And it's coming back closer to the cost curves of the lumber producers. And we've talked about this with all the different mining sectors and their cost curves. It's the same thing with lumber. The cost curves for lumber around $600, something like that. So we're probably getting real close to a bottom here for the price of lumber. We didn't have a stable supply of lumber, so I wouldn't use this ratio very well to say that it is a signal of the health, we'll call it, of the health of the real estate market, because that's really what we're gauging with this ratio. It's the health of the real estate market. That this isn't accurately, in my opinion, it's not accurately showing the health of it because we had this big supply shock that happened. So the reason that it ran up was that supply problem. And then it came back down when supply came back online. Now, does this play against your commodity theme? It does not, because real estate is still in an expansion phase of real estate. We never had a stable supply in lumber, where the lumber to gold ratio was actually a true measurement of real estate's health. So that ratio got messed up because of the supply problems that we had. So I don't think it's a good signal, the lumber to gold ratio right now for commodities and the boom that's coming. Now, there is something that is going on, and I'll touch on it right now, is we're using a lot of these signals, and these signals tell us when things are about to change, the ratios, that is. Lumber outperforming gold, platinum outperforming gold, gold to Dow ratio, gold to monetary base. We're using all these ratios to tell us where money has flowed and where it is flowing based off of the ratios movements. The problem is the Federal Reserve is playing with all of the signals. They're playing with everything. They're in there buying bonds. At least I think so. I think they're doing yield curve control. I think they're messing with all, some of these ratios, like I've said, putting oil on the market, putting copper on the market. China is at least that's what the article was saying. And a lot of these ratios got messed up with the COVID shutdown. So it's difficult to use all these signals. Now, in the short term, what you would see is these signals would all go negative like you're seeing. And you'd see the 10-year drop, which we have seen. So maybe there is something still in the system that needs to get worked out. I don't know what it is. But we're seeing copper drop, but is it really dropping? Is that a correct signal? And with China and all these other countries and the shutdown, they're playing with all the signals that give us data as investors. They're playing with all of them. So it's very difficult to actually get a very good read on the short term. On the long term, a commodity boom is coming. And the reason is all long-term charts, when they come down and then they base, and now they're all starting to come back up. The government needs to figure out ways, or the Federal Reserve, or both, need to figure out how they can control it. And they're playing with all the signals that give investors signals to rotate money into commodities. They're playing with it. And I don't know at what extent are they playing with it too? Are they the ones buying the 10-year to drive it down? I don't know. Who the heck would be buying 10-year bonds at these yields with inflation where it's at? Makes no sense. I don't think we've ever seen inflation go up like we have and had yields dive down like this. There's a huge disconnect somewhere, and I don't know which signal's right necessarily on the short term. On the long term, I know a commodity boom's coming because of the ratios and how all the technical analysis is turning that these things are turning up and momentum and whatnot. The momentum's slowing on technology stocks, the NASDAQ, the Dow, that wants to go down. But someone's in there buying it and pushing it up, in my opinion, by looking at the charts, by looking at the 10-year, by looking at all these different signals. I don't know how you can have massive inflation, some of the highest inflation rates, put some of the largest real negative yields on it, and have some of these sectors perform the way they are. It makes no sense. So there's a lot of signals that are out there that they're playing with, I think, to get people off guard, to put money into stocks, into technology, into the things that they want the money to flow into, and get it away from commodities. Because commodities is going to manifest itself in a higher CPI number. So what they're doing is they're printing money, they're directing it to where they want it to go, and they're trying to suppress the prices of everything through the CPI. One, they lie about the CPI, and two, they're trying to suppress commodities from us actually figuring out how bad this inflation could potentially be. So that's the commodity theme, that's the signals theme, and that's also the lumber to gold ratio and what that relationship is, and why I think that signal is jacked up right now because of that supply disruption. YouTubers are saying it's a bad time to buy real estate and the price of lumber spook people. So I think it's a good time to buy real estate. I know that sounds absolutely opposite of everyone else. If we have this inflation and you get a mortgage, you buy a house, we have super low inventory. I don't know if this inventory is I don't know where it's going to come from. You're going to have to build your way out of this. It's going to take a long time to do this. And if lumber's all jacked up, we're not going to build the homes. So I think this is going to remain elevated and probably go even higher. I know I'm the contrarian in this group. And I know that scaring people gets views. They make more money off of scaring people. They make more money off of having people click their stuff and then giving a scare, scaring people, because innately in human beings, we seek things that scare us. The fear is a stronger emotion than the want of gaining or a positive. So the negative emotions are much greater feeling than the positive emotions. So you're more than likely going to click on a negative title than you would on a positive title. It's human psychology. So a lot of these guys, they're pushing a negative narrative probably because it's a positive reinforcement through their views and how much money they make on YouTube. But that's my opinion there. I don't think I think we still have 5 to 10 years in a real estate boom, and I think the biggest gaining years are still ahead of us. We haven't even seen it. Now, if inflation's out there, if I'm right on the inflation aspect, and we'll get into this here afterward, if it is inflation, and I think it has to be, then money's gonna come in the system, and people like myself and anyone else on the channel. And if you haven't subscribed yet, please subscribe. But if you're on the channel and you've got your commodity stocks and they're all going through the roof, I highly doubt that if our accounts go up 10x in total, that a lot of us are not going to buy homes. We're all going to go out and buy probably something. Now, if it's inflation and we're making a bunch of money and other people are making more money and the debt is getting eroded away, because that's what happens when you're the largest debtor in the world, which is the U.S. federal government. They're going to inflate these debts away. People are going to go out and buy homes. I've heard other YouTubers say that we're going to have inflation, like hyperinflation, and home prices aren't going to go up. They're crazy. There's no way. I've never seen in history a hyperinflation where home prices went down or sideways. No way. And I'm not saying we're having a hyperinflation. I'm just saying in general, I don't see how that can happen. Like logically, philosophically, I can't. There's no way. If you gave me zeros on my account, I'd go buy another house right now. Why not? And if they're inflating, I'm gonna have to put that money somewhere. I got to get rid of it. So home prices go far higher in high inflationary environments, and you want to loan as much money as you possibly can. If that were to come, if you see a bunch of inflation coming down the road, I mean, buy a house, lock in the interest rate, do it as quickly as possible, and then pay it back with worthless dollars 30 years from now. I mean, that's a very smart move. I'm not telling you guys to go out and buy homes right now, but what I'm saying is if we had very, very high inflation rates, like hyperinflation style, that's what you would do, and you would accumulate like 10 homes and just pay it back the next day with massive hyperinflation. So home prices go up. So a lot of the people on YouTube I disagree with. There are some people that my sole reason for opening this channel was to basically go against what they're saying, because I would listen to them and I'd say, these guys are so wrong, it's unbelievable. So I had to create my own channel to get you guys information that I think is correct. I don't think house prices are going to go down. I don't think there's a chance in HELL. And the reason is there's not enough inventory. That inventory has to come from somewhere, and it's not going to come from foreclosures. You don't foreclose on a house when you're up $100,000 or $200,000 or $300,000. Are you going to foreclose on a house when you're up $300,000 in equity on your house? If your answer is yes, you are DUMB. You're dumb. And all you have to do is sell it on the market. There's no inventory. Sell the house. Why would you foreclose? I don't know where these guys are getting this. So I'm getting I get frustrated when I hear this, because people are like, well, they're just going to foreclose the house. You're going to foreclose $200,000 or $300,000 in equity on the house? You're going to give it back to the bank? Well, they weren't making payments. Sell the house. Go sell the house. Just simply sell it. Sell it and get the money. Why would you not do that? And I don't know anybody who's underwater on their loan in this housing market. We're in an expansion phase. We've had massive increases in home prices. Just sell the house. Sell it and get the money. So that's my opinion on real estate. And I will debate people. If you want me to debate somebody, get that Reventure guy. And I could tear his stuff apart in like, I don't know, less than a second. I mean, he takes percentage against percentage. I mean, that's so, why would you do that? Sorry, Yeah, that guy's crazy. But a lot of these guys, I guess they don't look at the real estate data correctly, and they cherry pick things. And then they use data from the moratoria, and they think all of this is going to come on all in one shot, and that all these people are going to foreclose. I just disagree. They should just sell the house. That's where I'm at. Now, some are saying the disinflation, deflation, inflation type thing. Well, historically, under real estate expansionary phases, it is inflationary. The deflation usually comes from a real estate crash. Almost all deflations have the origins in that. Go back in history and look at when there are deflations, like hardcore deflations. Usually real estate is the driver of it. Real estate's in an expansion phase and going higher. I don't know how we could have deflation with real estate going higher. And I don't know if a lot of these guys know that. And these could be guys that have been in finance for a while. But look before every single crash. The only crash that I could see happening would be contained into stocks, but I don't think it would affect real estate. And I don't think you're going to get the big deflation like the 2000 .com bubble. We didn't have this massive deflation blowout until the real estate market dove in 2007, which caused the 2008 crash because it's delayed by about a year or two. So that's the deflation, inflation portion. Now, disinflation is just saying that the inflation rate is getting smaller with time. That's usually demographic driven. I don't think we're going to have disinflation because we've got more people buying homes, which is inflationary. Disinflation is when your real estate, and look at Japan's real estate market. The real estate market's going down at a very slow pace. That's your disinflation. And they're pumping money behind it too, Japan is, to kind of raise it so it doesn't go into a deflationary move. So that's demographic driven, which you can see in real estate if you look at Japan's real estate. So kind of tying this all up, lumber did crash 63%. It came way back down, but it was because of a disruption in supply, and the demand kind of stayed pretty steady. And it went all crazy because of that supply disruption. Our commodity theme is still intact. The signals, the big long-term charts on all these commodities, whether it's ratio or price-driven, whichever chart we do, are all intact and looking to go higher in the long term. In the short term, it's difficult to read everything because they're playing with all of the signals that people use to see what the market's going to do. If you use the signals straight up right now with a declining 10-year yield, with the dollar remaining somewhat flat, with copper declining, and with oil kind of pulling back here recently, we could have a short-term pullback, which we've seen. How long is that pullback going to be in the short term? I'm not exactly sure on the short term. The short term is very difficult to read because the long term is the supply-demand fundamentals. It's the accounting of gold in the money supply, gold versus the money supply, that monetary base ratio. So it's all these things that are playing out that I do see and that are playing out. The short term is just at the whim of what people are trading at that time. Are they scared? Is there confidence? There's a whole bunch of jargon that's mixed up in news that throws this market all over the place. So in the big long term, greater than 4 or 5 years, I don't see how commodities don't go up. I think the stock market's going to roll over, the Dow, the NASDAQ, all those things, and I think they're trying to prop it up. And they're playing with all of the signals that people use as investors to mask whatever the heck they're trying to do. They don't want the money to rotate yet. I don't know why, and I don't know the full reasoning behind all this stuff. But I think they're playing with the signals. Well, hopefully that answers your guys's, or at least that question. I'm sure a lot of people are asking this question to decipher what the heck these people on YouTube are actually saying. And be careful what you listen to on YouTube. Get different opinions. See what people think. I am not in the camp of the majority of these people. I guess I'm kind of Han Solo. And even if we had some homes come on from the moratoria, for whatever reason, I don't think it's going to be in great enough quantities to really disrupt the entire market and to disrupt the commodity theme on the long-term basis. It would be a short-term blip if it were to happen. If you guys like this content, give me a thumbs up. Thank you for listening. This is Finding Value.